Thank you very much for the energizing introduction of this panel, and many congratulations for IDGM putting together such a fantastic event. We can feel here in the room and outside as well, we can hear it as well, the big energy, the passion and the ambition of the Falcon economy. And I think it's great to see that private markets are definitely part of it. It is my pleasure to take on the stage with a group of insightful and, I would say, courageous private equity investors. I say courageous because the topic we are supposed to cover in only 25 minutes is quite bold. What's the future of this big industry? What will the investment firm of the future look like in 5 years' time? Just as a matter of introduction, I'd like to give a few quick reminders. First reminder, this industry has grown from a niche alternative asset class into a massive industry managing over 12 trillion and growing by 15% a year over the last decades. Private markets are generating 50% of the revenue of the asset management industry globally, become a massive industry. Second reminder, probably worth mentioning, the roots of this industry are clearly in the West. The global champions of private markets were born and raised in North America, in Europe, that are still managing about 70–75% of the assets in private markets right now. Third reminder, the playbook in private markets has evolved a lot. Used to be the pure leverage buyout playbook. Buyout now represents, I would say, only 28% of private markets AUM, and it's now being challenged by venture and growth, representing about a third of the assets under management in this industry, and other private market asset classes, especially credit, infrastructure, that together represent about 40%. And then, last reminder, as it grew, this private market industry has moved from a small entrepreneurial space of shops to Wall Street titans, embracing the roles and responsibility of corporates. And that's something new in the industry that probably leads to the future. So I'd like to start with you, Uda, after these quick reminders that maybe are hopefully useful, to comment on this last bonanza cycle we've had. It's been great. Will we talk about it as the golden times, or is there more to come in the future, you think?
Yeah, thank you. So look, I think obviously the allocation to private capital has increased dramatically. There's a BCG report that says that public markets AUM over a 15-year period grew by 2.6 times, and in the same time, private markets AUM grew by 5x. So clearly a huge allocation shift. Now, the way I would say it is that it has been a great era. There's been a lot of acceptance, but I don't see that trend going away, and I don't see it as dramatic, but I do see it continuing. Why do I see it continuing? Because the secular drivers of those trends were wealth effect, portfolios requirement for higher returns, access through private wealth channels, now even retail channels, and increased products, private market products being brought on by all the private equity managers. So those secular trends continue, and therefore the growth will continue. Why I say it might not be as dramatic is obviously one of the big barriers to private market allocation is liquidity, and that has been an easier give over the last decade. Another important thing I want to highlight is that if you double-click on that growth that the private capital allocation has seen, it's not been all equal, right? I think there was a mention of the number of funds has decreased. There's been a lot of focus on the bigger pockets. There's been a lot of focus on developed markets. In fact, emerging markets did not see that dramatic allocation to private capital. But that's been an era where leverage and scale, because of the cost of capital, have been big drivers of return. As growth and niche strategies become more important and people start looking for growth drivers, commodities, consumer, I think that bodes well for private markets, specifically in the emerging markets.
Gart, any comment about the last cycle and about the future of this industry?
Yes, thank you for having me. I would suggest that the cost of capital is we've seen a dramatic change in the cost of capital. And as long as you've seen this huge rise in the cost of capital, there is this demand for private credit. I think in the short term that will continue, simply because you're getting equity-like returns on a debt-like instrument, with obviously all the protections that come with it. However, the capital market is there for the transition mechanism for capital and risk. And typically the cost of capital has been lowered in the public markets. However, over time, for whatever reason, regulation, maybe other things, has meant that the cost of capital in the public markets has become more expensive than in the private markets. The capital market's efficient. So what has happened is you've seen that capital migrate. Having a company like Stripe or ByteDance, in the private markets valued at 90 billion or 50 billion was unheard of 20, 30 years ago. But that is no longer the case. So my suggestion will be that in a short period of time, I suggest that what could happen is the amount of money that's gone into private markets will force regulators to have a look at that, particularly not just from the issuer's perspective, where I think they've had a lower cost of capital, but in secondary trading. And you just have to look at the debate around OpenAI and the secondary transaction that's happening there, and the protections that are not provided in secondary transactions in the private markets. And it could be that you will see regulation move into that space, in which case you may see a migration back into the public markets, and you'll see the public markets become a better transmission mechanism for risk. And that's what I think will most probably happen over time. I would also say to you that, over the next, 10 years, the rate of change will be much faster than it has been over the last 10 years. And therefore, you could start to see that happen incredibly fast, because I think it will behoove regulators to do something about the size of the private markets.
The three of you have something in common. You all have operations, offices here in Abu Dhabi and investing in the Gulf area. Karim, do you think here, Abu Dhabi or the Gulf region can become the hotbed of a new generation of investment managers that would soar in private markets?
I think this is a great ecosystem to launch a private equity firm from. We've been in Abu Dhabi for 17 years as Gulf Capital. We're one of the largest private equity firms. And the growth we're seeing on the ground is phenomenal. It's a great time to be investing in the Gulf. And actually, at a time when the US and Europe are slowing down, this region is entering its golden age. I mean, if you look at Saudi last year, grew at 8.7%, Abu Dhabi at 9%, and the momentum is continuing. So it's an exciting time to be here. And private equity is generating some interesting exits. We've worked on 5 exits in the last 5 years. We have 5 in the pipeline. And the returns are interesting. And by the way, these are not return fueled by cheap leverage. It's all about EBITDA growth. We are very laser focused on growing our companies. On average, we've tripled the profitability of the companies we sold. So the growth we're seeing on the ground here is phenomenal. So it's a good time to be invested in the Gulf.
You obviously agree with Karim, no? With
Absolutely.
Some insights about the region, perhaps, as an investor?
So look, I think we've always been a wealthy set of markets in the Gulf, and we've had liquidity, but I think the mindset shift that's taken place over the last 5 years has created this fantastic opportunity. And I like to characterize it as follows. We've always, as governments, as a big ticket riders, have spent money in our countries and invested it outside. I think that mindset shift was, no, we're going to invest in our countries and not only accept, but energize and catalyze asset classes such as private equity to be conduits of that capital into the economy and not just stay at the top level. So I think that's what's creating a fantastic opportunity.
Look, I would just add that I think that typically the region's been an exporter of capital. I think that it will continue to be a huge importer of human capital, because this is a place where you have safety, you have security, you have a tolerant environment, and I think therefore young people will leave some of the other major places and migrate here, and therefore the ecosystem for what has been built here in Abu Dhabi and in other places in the region, I think will continue to flourish.
Let's take perhaps the question of the future of the industry to your firm's level.
How do you think at your firm's level about the challenges the industry is facing? What big changes or shifts are you preparing at your firm's level?
Look, I think one of the things that we have to grapple with is the next generation. As the next generation enters a workforce and the existing generation, and you have a demand for work from home, that is incredibly challenging because it's very difficult to build a culture when people are not in the same place. It's very difficult to train people when they're not in the same place. The meeting about the meeting is where there's a transmission of knowledge and know-how. And as long as we need to grapple with that, because we need to get a better balance in terms of how we grow our company. And then, obviously, we just believe that if you think that, we talk about AI, what does that do? Robotics means that the production line may become obsolete. Therefore, there's going to be tremendous change in employment. And how will we grapple with that? And what we're trying to do is position ourselves in a place in which we're there to help in providing capital and some know-how as that happens. And we believe that will happen incredibly rapidly over the next 5 to 10 years.
Karim, perhaps, what big changes are you bringing to the firm to be ready for the next cycle?
I think one thing we're doing very well is building global leaders out of the Gulf. Every time we buy a company in the Gulf, we take it to Asia, Africa, and Europe and beyond. Our companies operate in 65 countries around the world. For example, we bought one of the largest intellectual property platform in Middle East. We did a bolt-on Eastern Europe, bolt-on Africa. We're doing one in China and one Latin America. We'll be in 120 countries. So big is beautiful, and we like to build global leaders which become very attractive to strategic buyer as an exit route for us.
Uda, big changes within the firm?
Well, I won't call it changes. My firm is only 2 years old,
Yeah.
so it's as I build it up. But look, I think what we focus, 3 things you really have to focus on. One is obviously the talent. I think talent is the most and the most challenging aspect of building a firm. And as mentioned, it is, it's a different culture, it's a different generation many times, and you do have to find the right balance. So we really look for people who have both the right attitude as well as the right aptitude to do the job. And then build a culture together. Second is technology. I think technology is very empowering. The way people do things changes, but the more you use technology, the more sustainable a system you're creating. We use technology in the small ways within our firm, within our portfolio. It's our biggest lever for value creation within the firm. And I think finally is agility. Everything we talk about, who knows about interest? Is it higher for longer or secular decline or whatever it is, or we talked about changes in private markets. But what we can all sign up for is volatility and complexity. So I think building agility in your systems and the way you build things is crucial.
Something I haven't mentioned, Uda, you coined the word in Arabic to say private equity. How do you say it again?
Mulkiya khasa. 2004.
So now we have to remember that word. It will become mainstream and very big in the region. I would like to thank you for taking on this very ambitious topic. 25 minutes was probably a bit too short. We'll probably have the opportunity to meet back in 5 years' time and hopefully look in insight and take on the next challenges. Thank you very much.
Thank you very much.